Joining me now is Arneem Holzer. He's the global macro strategist at Easterly EAB. Welcome to the show.
Thanks for having me, Ashley.
So what is the biggest market story that you're monitoring today?
Well, I think, top of mind is obviously the government shutdown. I think there's also some interesting issues around how effective and how productive the AI investment's going to be. But first, looking at the government shutdown, I think there's often a little bit of a play up into volatility. We don't see an enormous long-term impact from this, but obviously it does create some short-term volatility in connection also with the fact that the president has clearly amped up his tariff and trade policy around some of the deals that we thought might be put in the past. It looks like he's amping up some of the pressure there. So the government shutdown and the trade deal with obviously the Fed and some of the inflation data in the next week or two, I think it's a pretty volatile mix.
And how should investors be approaching the possibility of a government shutdown? And how much of an impact do you think it'll have on markets?
Well, I think first of all, in the long term, if you look at this historically, the S&P has not really given you, tremendous information ratio, tremendous alpha from these moves. There's been a little bit of volatility. There is some economic impact, but traditionally it resolves itself relatively quickly. We have had a few that have gone, 30 plus days, but our view is that, market decline's not guaranteed here. And the shutdowns uniformly have not necessarily hit stocks. And in an environment like this where there are some secular themes that clearly are in their investment phase, I would be careful about necessarily, abandoning equities in general. I do think bringing volatility into portfolios makes a tremendous amount of sense here. Taking strategies that actually do profit from quixotic or cyclical volatility makes sense. But I wouldn't be taking the step of abandoning risk here, because this could be resolved within a week to 10 days, and the impacts may be shorter lived. However, we do think that there's an opportunity to play some ranges in volatility, and that's the type of approach that we take.
All right, and previous guests on our show have said that 3% is the new 2% when it comes to inflation. Do you agree with that?
I think this is a really interesting discussion, and the chair has tried to avoid the issue of R star or what the equilibrium rate should be. Our view is that inflation pressure from a secular point of view, from a structural point of view, is in fact higher. And if you've heard some of the Fed speakers of late, there is a possibility that inflation may no longer be in that 1.5 to 2 range, and that a 2 target is really difficult. And we know that they haven't been able to achieve it for years. I think the reality is that it's probably closer to between 2.5 and 3. And as a result, Fed policy may not be as restrictive. And maybe 1 cut to 2 cuts might be the max in this cycle that they are able to get. That if they really can only get 2 eases, is the market potentially a little bit ahead of itself in terms of expecting 125 basis points from here. Our sense is, I would agree that structurally, the rate of inflation is probably a little bit higher. And because of productivity and some of the issues in global competition, we may actually be running, we may not need to cut rates as much as we think we do.
All right, and what do you see the Fed doing into 2026?
Well, our concern is, in fact, if some of the inflation data does not start to give a little bit more of a sympathetic view to what's happening on the labor side. In other words, it's kind of softening in concert with what we're seeing on the labor side. The Fed may be thwarted in what they can do in this cycle. And if you actually had a couple of moves up in inflation without greater weakness on the labor side, the Fed may, in the first quarter of next year, actually have to look at whether they eased prematurely. I don't think it's quite a burn scenario yet, but you don't have the idea in this market, in terms of what's built into the outcomes, the probabilities, you don't have the idea that the Fed would actually raise rates. But I definitely think you're going to have to start incorporating the idea that getting down to a low 3 handle on Fed funds is going to be very difficult to do. I would think that somewhere between 3.5 is 3.5 to 3.75. It may be really where they end up, and that's not in the Fed funds futures at this time.
All right, and Arnie, where do you currently see risk in the market?
Well, first of all, I think from a holistic point of view, and we're a volatility and correlation research firm, we're concerned that you've seen greater pressure on tariffs. You still see some concern around Fed policy. There's obviously still geopolitical and obviously with the government shutdown. Yet when we look at implied correlation on the S&P, the CBOE implied correlation is the 1 month is around 10. We think that number should be between 20 and 30, given the fact that there are still macro factors involved. The VIX for the year is down about 7%, from where it started, with a 14% performance here on the S&P. That kind of makes sense. But we still had these spikes into the high 20s, towards 30. I think there's still a potential that the market is underappreciating where risk could go. And in fact, if you look at the VIX contracts, the curve, it's still actually relatively steep, which gives me a sense that insurance is being taken into the fourth quarter, assuming that there's still the potential for some disappointments here. And so I would really urge investors not necessarily to abandon long positions, but to be really incrementing, to be bringing in strategies that can make money, that can offset risk from trading volatility. It's similar to what we do in our hedged equity product. We really feel like investors need to not be apathetic or complacent about some of these risk factors.
All right, thank you, Arneem Holzer, Global Macro Strategist at Easterly EAB.